Hello traders, Dick Shaheen here looking at Zillow. Reported earnings, fell out of bed. It's still down 13%, but not as bad as it was before. You can see the candle. This is a daily chart. Before I forget, at the end there'll be like a subscribe button that pops up on the left hand side, so hit that. It's free to subscribe to YouTube. And also if you're interested in the chat, let me know. Back to Zillow. This was the ugliness that happened this morning. So I don't have a trade in it. I'm just helping out somebody. What do I do now? First, let's look at the fundamentals a little bit. And in this case, I never liked the company from the beginning as far as the air of it. But they had a pretty decent business model going, and then they messed it up. What do I mean? They started getting into other stuff, thinking they're smarter than the average bear. And the problem with it is the assumptions they're laying on top of each other. I don't mind a few assumptions here and there, but the assumptions that they're adding are pretty crazy. That's not what I wanted. Let's see here. I just wanted to see the metrics, the usual metrics as far as valuation, price to sales, price to book quickly. Alerts today. Markets are open. So they still lose money. Earnings per share is negative. 7, almost 8 times sales. That's pretty steep. And price to book is like 3 times, but who's to know what the book is because of part of the assumptions they're doing. Okay, so I don't mind saying, okay, I have an assumption that this stock will go up if markets do this or if real estate does that. I don't mind that, but they're laying one on top of each other. So they're banking everything now on the valuation. So they have a formula that determines value of the house, property. And then that's fine. This one thing to display it and sell ads around it. That's a beautiful model, subscription model. People are by default have to go to you. You got all the real estate companies. So basically they were in the picks and shovels business, and now they decided that they actually want to open a mine. And what they're doing is the way I understand it, they're actually making bids and buying houses and maybe to flip them. So this is a dangerous territory to be in my opinion. Because your assumption, you went from not having actual skin in the game, just display purposes and revenue from your subscription model, to actually having assets. So there's no problem with that if real estate continues to go up and up and up, or if they don't get caught holding the bag. Remember what happened in 2008? That was one assumption over and top of each other, and everything was laid down as like a house of cards based on one thing, which is the house value. And when that went into the toilet, the whole thing came crashing because assumption on top of assumption. This case, it looks like that. I'm not an expert in the company, but this is my opinion. So they went from picks and shovels to sell to the miners into actual mining, and that's pretty dangerous. All right, so back to the technicals. Is this a good time to get out? For me, if I haven't gotten out, I wouldn't sell here because this is a pivot point. I'm looking at the daily chart, and first of all, the bottom of the candle got rejected pretty hard. There should be support here. This orange line here is the point of control for the whole year. This is 12 months, meaning this is where a lot of action has happened. So it should be support. And it's a zone. It's not a hard line in the sand. In fact, if I look left, look at this right here, right there. This was a big roof that failed that one day, whatever that happened, the last earnings report. And then they took a few days to think about it. They got to it, and then boom, off to the races. They defended this line quite a few times, and look at that, they were just above it. So if I were to say, okay, the first bug out line, if I'm still long the stock, I'll say, you know what, if we lose this line right here, 41.70, then I'm out. That may be the first place I'd put the out button. If I'm okay losing a little bit more, then maybe it's this line right here, 40, because of this. Okay, the first line was because of where was it? Somewhere. This one, and now because of this one. And look at that. This, I can consider these two efforts right here failed kind of like this one. Same here. This was an overreaction on whatever they said right here. So this whole zone, if I put a circle around it, same as this zone, same as this point right here, and the breakout. So this whole zone, the $40 line, is a pivot. And look at the bottom here today. So it's not a coincidence. I bet you if I expand this view, the situation expands further left. I can tell you right here, same style. So I'm going to go to a weekly chart. Boom. This is the same point, right? That's the zone that I said looks like this zone, looks like this point, just to resituate us. Okay, so look at that. This zone right here, again, pivotal. I'm going to keep going left. Now, this is 5 years now, weekly. Every candle is 1 week. I'm going to keep going left. Look at that. Where is it? There we go. Again, look at this. I mean, you can't draw it any more perfectly. This, boop, right there. And look at this. Exactly. And they say markets aren't rigged. Well, let me rephrase it. Well organized. Well, in this case, machines trade based on givens. If this, then do that. If that, then do this. So this markets have memory. Okay. So this is a pivot point. This is where it is. So it should be sticky. Now this is a weekly candle. So if I'm selling puts and I'm short a put below it, then I'm not panicking out of it. All right. So what's the upside? I wouldn't chase it anywhere unless you love the company. And if I love the company, then I would look for the last failure, and I'll look at that on a closer time frame. So here's the problem with me. Once they lost the trend, I drew this months ago, obviously, and I don't remember drawing it. So I thought this would be the bottom, and they got there, and then they fell out of bed. That's probably everybody, the last collapse from the December crash. So most of this is not its fault, but down to here was its fault. And now they're pivoting around the trend line, and they're trying to hold the trend line. So if they lose this area, then the bears will be back. The bears will be back in control. So a bad day could have been worse based on this candle. Let me see. Volume was not that big so far. The volume here was huge. The volume here was even bigger. So we shall see what happens. The one clear thing is I don't panic out of it here because of this $40 line that I just showed us that is a zone. So 40 to 37, 40 to 38 should be support. So that's the number one takeaway. Chasing it up from here, I don't know the company enough to love it. And there's a gap now here. So if you think that markets will fill gaps, then maybe you'd buy a flyer. Maybe I buy the company as a stock and hold it so time is not an issue. If I love it, but if I don't love it, then I don't do that. Or if I also love it, I can do calls or call spreads, but I give myself time. So I go out to December or next January so I don't run out of time. Or if I know what I'm doing, I can sell puts in the stock, and I bet you there'll be some pretty good premiums on a day where it's down this much and the VIX is still high. So I would sell puts or put spreads in it to create income without needing a rally to profit. If you need more information about that one, hit me up. Nick signing out. This was Zillow.